Welcome to Markets Now. I'm Michelle Rourke with Kent Beadle with Paradigm Futures. We are seeing mixed trading, both grain and livestock futures early in the session. Kent, thanks for being with us. Let's talk about soybeans. First of all, we'll kind of get the bad news out of the way. A little bit lower this morning, but we really didn't have the best technical close yesterday, either in soybeans or in the meal market, did we?
Yeah, the meal market has been kind of helping to pull the soybeans down. Meal back down, challenging its lows from 2 and 3 weeks ago. There's a number of reasons. Obviously, we continue to have a very strong crush here in the U.S. We saw that on Monday afternoon in the fats and oils report. And while our demand for vegetable oil continues to be very strong, the meal becomes a bit of a byproduct in this environment. And we've had great exports for much of the year, but now we're getting close to an Argentine harvest where we expect that Argentine meal is going to be more prevalent in the world marketplace. And that's, putting meal prices back down into a lower range that we probably should have expected, somewhere in the low $300 area. And that's exactly what we're seeing.
Yeah, no doubt. Let's also talk about the fact that, with HPAI, is there concerns here on the meal market, maybe even the corn market, about feed demand?
Yeah, well, I think that's, I think we traded that initially a week ago when the story first broke. Obviously, we got a nice rebound off the USDA numbers on Thursday. But then when you had a human case here early this week and the collapse of the cattle market on Monday, it has been back at the forefront of people's minds. And I think we did trade that a little bit yesterday in the corn and are trading it again in the meal. We did hear that we might be slaughtering some birds, which of course, if this translates into a larger poultry outbreak once again, then we're going to be worried about soybean meal demand and corn demand for poultry.
Yeah, and it felt like we traded that the first 2 days of the week here in the corn market. We're trying to push higher this morning, but it's because we're getting some help in the corn from the wheat market, right?
That's part of the reason. Yeah, we're getting some help in wheat. The wheat weather is not particularly great right now. We need some rain in the southern plains. It's been dry. We've had some systems come through. The amounts out of those systems have probably been a little bit disappointing if you're a wheat grower in Kansas or Oklahoma. It isn't just a domestic story. It's been maybe a little too wet in some important wheat growing areas in Europe. And then as you move east into the Black Sea area, they've actually been on the dry side and they've started to get really hot. And so weather has been skewing a little bit bullish in the wheat, and we're finally trading that a little bit today. And that's helping the corn out a little bit, as well as, the residual from the demand in the corn. I mean, we still have to pay attention to the fact that, ethanol has been strong, and the stocks numbers suggest that feed demand has been strong. And our exports, we're running 33% ahead of a year ago in terms of our shipment pace. These are all really good numbers. And while there's been some chatter about China and maybe they're trying to manage their domestic situation by limiting some corn imports, we've been hearing some stories that China was going to cancel some corn from the U.S., but the fact is that they have very little corn to cancel. There's only 156,000 tons on the books. They're not going to be canceling any U.S. corn because they don't have any U.S. corn to cancel.
Yeah. I also have to believe wheat may be seeing a little short covering just because, one, Minneapolis wheat hit new contract lows yesterday, but the dollar's kind of backed off at least a little bit. And we've been watching those outside markets. I mean, crude oil's trading, this Red Sea war situation escalating, isn't it? And the dollar has been trading the fear of interest rates continuing, right?
I mean, you've got energy prices are rallying for a few reasons. And of course, the Black Sea situation is one between Israel and Iran. But you also have, continued drone strikes from Ukraine on Russian refinery capacity. That is starting to take its toll. And so you've got a supply situation that we're starting to deal with. Now, U.S. supplies of energy have been strong, much stronger than people anticipated that they would be, considering the administration. But we're still seeing higher oil prices, and of course that's leading to better refining margins for renewables. So that's part of the reason that our ethanol grind continues to be strong. We're going to see that number this morning. And of course, we saw the monthly number on Monday that was a record for the month of February.
Yeah. So the other market that's been impacted by the high-path avian influenza, not just in dairy cattle, but now in humans, has been the cattle market. We had another dairy in Ohio now, so another state added to the HPAI list this morning. So this market, even though we had some recovery yesterday, are the funds now, just because of the uncertainty, going to sell on every rally, you think?
Well, they have a long position, and liquidation in the midst of uncertainty is generally the way the funds operate. So yeah, we would expect that rallies are probably going to be sold. We had a recovery rally yesterday, maybe a little bit of a surprise to the trade given the way that we closed as poorly as we did on Monday. It's probably going to be a little bit more choppy. I think that the tone in cattle could still well be negative. But I do have to say that some of the cash trade that developed yesterday around the country was quite a bit better than those futures implied that it would be. And we still are short cattle, and unless we're going to put the kibosh on consumer demand for beef in the midst of all of this, and there's no evidence of that to date, ultimately it's going to be the cash markets that determine how much cheaper we get in the cattle futures.
Yeah, that's a good point you make, because the futures discount to the cash just widening is going to be at some point supportive. Yeah. You can't get it that wide. What about the hog market? Reciprocally, is demand going to push over into that market because of HPAI? We've seen cash and cutout values already strong, but maybe are we going to continue to see demand support that market?
Yeah, well, I mean, we're off to a good start this week on the cash side, and that's helping things out. And clearly, this is the protein product that is getting the benefit from this situation right now, because just the word bird flu implies problems in poultry, and now that we're seeing it in beef, and we're seeing the liquidation there, the demand is probably going to go somewhere, and so we're trading the hogs fairly firmly. Considering the pullback that we've had in corn, the pullback in meal, and this rally in hogs, we're actually putting hog margins into new highs again, and it's just really, really strong profitability that can be locked in by hog producers in the aftermath of a year that brought them a lot of red ink in a lot of cases. So very very helpful for the pork industry, that's for sure. And it's a very interesting reaction given the the revisions to the hogs and pigs report that we had last week, with the additional supplies that we had, that we're able to get a rally early this week. It's very impressive.
Yeah, a bullish reaction to a seemingly bearish report. And today, I think we're hitting new contract highs in even like the June hog futures. So does that just attract more fund buying?
Yes, it does. Yeah, it does. And they're long, and it looked like they may be tipping over. I expected that without this, without the bird flu news, I think that market might have tipped over a little bit this week, but we're probably getting some speculative buying into new contract highs from the funds today. Absolutely.
Yeah. And not only that, but maybe some cattle hog spread action being put together there. So,
yes.
All right.
Absolutely. Thank you, Michelle.
All right. Thanks, Kent. Kent Beadle with Paradigm Futures. That's markets now. Remember, futures and options have substantial risk and are not suitable for all investors.